Ever feel like your savings are just floating? Like one big, amorphous blob of money that you hope is growing, but you're not entirely sure what it's growing towards? You're not alone. For years, the traditional savings account felt like a necessary evil, a place where your hard-earned cash sat, maybe earning a little interest, but lacking any real direction or purpose. But what if I told you there's a way to inject intention and clarity into your savings strategy? What if you could visually organize your money and watch it grow towards specific goals, all within the familiar interface of an online bank? Enter Ally Bank in their brilliant Savings Buckets feature. Now, this isn't brand new for 2025, Ally has had savings buckets for a while. However, the way we use and think about these buckets is evolving, becoming a cornerstone of a smarter, more proactive approach to personal finance in the coming year. We're moving beyond just stashing cash and actively designing our savings for the life we want. Think of it like this. Instead of one big jar labeled savings, you have several clearly labeled containers: down payment on a house, dream vacation to Bali, emergency fund, new laptop, and you can see exactly how much money is allocated to each. This simple act of visualization can be incredibly powerful, transforming your savings from an abstract concept into tangible steps towards your aspirations. So, how can you leverage Ally Bank savings buckets to supercharge your financial goals in 2025? Let's dive into a strategic framework. Step 1. Define your financial landscape. Before you even log into your Ally account, the first crucial step is to get crystal clear on your financial goals. What are you saving for? Be specific. Instead of travel, think 2-week trip to Italy in summer 2027. Instead of new car, think down payment on a hybrid SUV by end of 2026. Categorize your goals into 3 horizons. Short term, 0 to 1 year. These are your immediate needs and wants. Think emergency fund contributions, saving for holidays, a new appliance, or a short getaway. Midterm, 1 to 5 years. These are larger goals that require more planning and saving. This could include a down payment on a car, funding a wedding, starting a business, or a significant home renovation. Long-term, 5+ years. These are your major life milestones, like a down payment on a house, retirement savings, though these often live in separate investment accounts. A bucket can represent a supplementary early retirement fund, or funding your children's education. Once you have a comprehensive list, prioritize them. What are your absolute must-haves? What are the nice-to-haves? This prioritization will help you allocate your savings effectively. Step 2. Create your buckets with purpose. Now, it's time to bring your goals to life within your Ally Bank account. Log in and navigate to your savings account. You'll find the option to create new buckets. Name each bucket clearly and directly related to your specific goal. Here are some examples of buckets you might consider in 2025. Emergency fund, aim for 3 to 6 months of essential living expenses. This is non-negotiable for financial security. Down payment fund, specify the property type and target location if possible. Vacation fund, name the destination and approximate time frame. Car fund, detail whether it's for a down payment or the full purchase. Home renovation fund, break down larger projects into smaller phases if necessary, e.g., kitchen remodel phase 1. Education fund, specify whose education and the level, e.g., Sarah's college fund. Investment seed fund, if you're looking to start or add to your investment portfolio, a dedicated bucket can help you accumulate the initial capital. Annual expenses, buckets for predictable but less frequent expenses like insurance premiums, property taxes, or annual subscriptions can prevent financial surprises. Gift fund, allocate a specific amount for birthdays, holidays, and other occasions throughout the year. Don't be afraid to create as many buckets as you need to reflect your unique financial situation. The beauty of Ally's system is its flexibility. Step 3. Automate your contributions. The real magic of the savings bucket strategy happens when you automate your savings contributions. Set up recurring transfers from your checking account to your various buckets based on your income and financial plan. Consider these automation strategies for 2025. Percentage-based allocation, allocate a percentage of each paycheck to your different buckets. For example, 20% to your emergency fund, 30% to your down payment fund, 10% to your vacation fund, and so on. This ensures that all your goals are consistently being funded. Fixed amount allocation. Set a specific dollar amount to be transferred to each bucket on a regular schedule, e.g., $100 to the emergency fund every bi-weekly paycheck. This is useful for goals with a fixed target. Prioritized allocation. If some goals are more urgent than others, allocate a larger portion of your savings to those buckets. As those goals are reached, you can reallocate those funds to other priorities. Roundup rules. Many banks, including Ally, offer roundup features on debit card purchases. Direct these roundups to a specific savings bucket for a small but consistent boost. Automation takes the emotion and willpower out of saving. Once set up, your money will automatically flow into the designated buckets, working towards your goals in the background. Step 4. Visualize your progress and stay motivated. One of the most significant advantages of using savings buckets is the visual representation of your progress. Regularly log into your Ally account and see how each bucket is growing. This visual feedback can be incredibly motivating. Consider these ways to enhance visualization in 2025. Set target amounts. Within each bucket, you can set a target amount. This provides a clear endpoint and allows you to track your progress towards it. Celebrate milestones. Acknowledge and celebrate when you reach milestones within your buckets. This could be a small reward or simply taking a moment to appreciate your progress. Regularly review and adjust. Your financial goals may evolve over time. Review your buckets and your contribution amounts regularly, at least quarterly, to ensure they still align with your priorities. If a goal has been achieved, decide where those funds should be redirected. Visualize the end goal. Keep a visual reminder of what you're saving for. This could be a picture of your dream vacation, a vision board for your future home, or a spreadsheet tracking your progress towards your investment goals. Step 5. Integrate buckets with your overall financial plan. Your Ally Bank savings buckets shouldn't exist in isolation. They should be an integral part of your broader financial plan. Consider how your buckets connect with other aspects of your finances in 2025. Budgeting. Your budget will inform how much you can realistically allocate to each savings bucket. Track your income and expenses to identify areas where you can save more. Debt management. Prioritize paying down high-interest debt before aggressively funding your savings buckets, except for your emergency fund. Debt can erode your progress. Investing. While savings buckets are for shorter to medium-term goals, your long-term goals like retirement will likely involve investment accounts. The investment seed fund bucket can be a bridge between saving and investing. With that said, thanks for watching and until next time.